Next up, we've got company reporting. The key things that you're looking out for here are earnings as well as any potential M&A. M&A, merger and acquisitions, these can come about completely out of the blue. They are unscheduled, and so it's more about understanding the opportunity very quickly. So I'll come on to that into a moment. First up, earnings. Big ones are in the US because they come in European trading hours. So US earnings season starts around about mid-month after the end of a quarter. So for example, it will start middle of April after the first quarter of the year. They're released as text. You will get a number, but it will come down as a text release, not at a specific time either. So you do have a bit of an edge there because it's harder to plug a computer in to trade those specific earnings. Unfortunately, at the moment, they're not getting the traction that they used to, and this is because generally company risks are slightly smaller. You're not seeing big deviations in earnings. However, focus industries, that's where it does become quite important, and you'll see that in the example I've got where tech industries are quite a big thing at the moment, being 2017, whereas in 2008, autos and banks, their earnings were a massive deal because of the impact that was going on and the financial crisis at the time. So focus areas are what's very important. Now, you trade this in the same way that you would any other economic release. So prepare yourself for it. Look at the market structure, look at previous ones, expectations, and how you're going to execute that trade. So again, and in this, that's where you note down the times of previous releases. Generally, they'll always come out around about the same time, but you'll see some will release 2 minutes before the hour, some will release 35 minutes past the hour. So be very aware of that and note down the previous ones so that you are at least got a little bit of an edge, so you are watching at the appropriate time. Now, in the US, the important number to be watching out for is their EPS, earnings per share, and the adjusted or GAAP number as well. That's very important. Following on to that, you're then looking at revenues and then any full year results or guidance that they may well give you. This doesn't necessarily have to come out with the results, the full year guidance. However, that is often very big, particularly if they guide significantly up or down from what was expected. In Europe, you're looking out for the EBITDA and revenues as well. Difficulty with European earnings is that they are released generally pre-market, like the US ones are, but they're released pre-European market, so there is nothing open to trade them on. You do get a couple, most notably Glaxo, which is a big FTSE component. They report in market hours, so that is often one that is very good to trade, particularly in Europe. So moving on to M&A. What is very important with M&A is the company who's acquiring and the one being bought, the size of that company, and also the size of that company within the index. So when you look at the Bayer Monsanto deal, which I'll show you on a chart in the next slide, the key thing was Bayer shares had a much greater impact because the DAX has only got 30 components, and because Bayer are the biggest, the impact there was huge, whereas Monsanto being in the S&P and not a huge component, you know, there's 500 companies in the S&P as well, is not going to have the size of impact that, you know, you would, compared to how Bayer would affect the DAX. So be very aware of the market that each company is in and their size relative to that index. Also, general rule, the acquiring company, their shares will fall. The company being bought, their shares will rise. That is a pretty general rule, and so that is what you can expect to be looking for on a release of any kind of M&A activity. Usually you will hear it as there is talk that the company wants to buy another company. You're not often going to get this company has bought this company for this much. You will get an expected offer for the company, or a stated offer for the company, and then there's expectation that that will be negotiated, and often that number is moved higher. So there could be a couple of trades on it. And the next thing is if one of those companies is then removed from the exchange once the merger has happened, and this happens in the case of AB InBev and SAB Miller. SAB Miller was removed from the FTSE, and I will show you what happened there. Being very aware of this and the date that they're removed is very important, because that created a huge move in the FTSE at the end of the day, and generally a lot of strength in the FTSE throughout the day, and I'll explain why in the next video. So they're the key things you want to be watching out on company reporting. Earnings and merger and acquisitions, they're the key ones.
Here we've got IBM earnings. Like with most of the tech companies, these come out after market, so trade is slightly thinner, but nonetheless, trading opportunity. IBM is the third largest company in the Dow. That's why I've used their example. Good opportunity to have a little go at a trade here. So what are we looking out for? We're looking out for their non-GAAP. You're also looking out for any change in the full year expectations. You get that trade very early. Here you go, full year, down here, 1380. You see a little bit higher up, we clarify, or Reuters clarifies, that their full year share view was 1374. So not a big beat, but IBM did state that it would be at least 1380. So I think that's what initially got the move going. You've then seen non-GAAP beats at 5.01. It does beat the share view of 488. However, the revenues are a miss on the previous year. They do beat the expectation. I think this is why we get the quick move up. It is a beat on revenue, it is a beat on non-GAAP, and they're also increasing their full year. However, we do see later on the reversal and the move back down on the fact that revenue is lower compared to the previous year. So yes, whilst it's beat expectations, it is lower, and also their GAAP share EPS is lower as well. So that's why we've got the turnaround. But straight off the bat, you're seeing good expectations for the year ahead. You're seeing a beat on revenue, and you're also seeing non-GAAP EPS beat. So that's why we got the very quick rush up. You get a good 40 ticks on the Dow. So that's the one to be trading. It is all about how big the component is in the index at the moment, and IBM being one of the biggest does still provide a pretty good trading opportunity. So we'll move on and we'll go and have a look at a bit of M&A activity. This is Bayer looking to acquire Monsanto. Once again, remember, Bayer, the biggest company in the DAX. Monsanto, not such a big S&P component, so the interest here has got to be in the DAX if you are going to be having a go at trading it. Now you can see, as we stated, the buying company, Bayer, their shares fall quite dramatically on statement of an interest, and then the bid is confirmed. The bid is confirmed at $122. This is where you start seeing Bayer shares really, Monsanto shares really rocket higher. They don't make it all the way to 122. Ultimately, there is a risk priced in that the deal has not yet gone through, so the shares will not go straight there, because there is the risk that it won't happen. You will see some merger arbitrage activity whereby they will sell Monsanto shares and buy Bayer shares on the possibility that the deal will actually fail, and you'll get the reversal. Ultimately though, keep in mind the size of the company in the index. Bayer being such a big impact did push the DAX down. You got a gap down on both of these days noted here, and so that's where you're going to see that weakness in the DAX. Even if the other companies in the DAX rise that day, you're going to see weakness in the DAX compared to other European equity markets. And finally, let's have a look at a continuation of what happens once you get a merger between two companies. This is SAB Miller's removal from the FTSE. What happened is SAB merged with Anheuser-Busch, and as a result, their shares were delisted from the FTSE. So what happens there is the people who own SAB Miller shares will get their money for their shares as part of the merger. This then gets reinvested. Often, shares aren't always owned by individuals who are just going to take their money and put it in their pocket. They're going to reinvest it. Firms like pension funds, mutual funds, and this is why you get a really big bid up in the FTSE all day. It was very, very strong that day. it outperformed all of the European markets by quite some way that day. And also you see the buying continue on into the close. And this is the last 10 minutes, just this move up here. 40 tick move in the FTSE. You also see a massive increase in delta going into the close. This is, as you're seeing, strong bids coming in as people put their money to work and also try and push up the price to the last bit of SAB Miller shares. And then as soon as you get past the 4:30 close, you have the closing auction, which takes back a huge amount of this artificial bidding up of the FTSE all day. The final few shares of SAB Miller are sold, and this drop was a full 80 ticks in 3 minutes. Very, very strong selling. You saw the size really come in and drive the market lower. So that's what you've got to be looking out for on which shares get delisted from exchanges, and it often will give you a very, very good trading opportunity on the close of that particular day.